Hey, it's Dan. In the news today, want to get you another update on mortgage forbearance. Forbearance, as you remember, is an agreement you can make with your bank not to make mortgage payments right now if you can show either job loss or considerable reductions in income as a result of COVID. As a side note, if you think you qualify and you need to take a break on your mortgage payments, don't just stop making them. You need to contact the person who holds the note on your mortgage, go over this with them, and get something in writing. Don't just stop making payments. But there's plenty in the news about how the forbearance crisis could result in a big housing market crash, a burst of the bubble, so on and so forth. But it's important at these times when articles sometimes are competing for attention and headlines are written to get you to click on them because that's how they sell advertising, to take a look at the data and ask how concerned should we be? And I want to be clear, by no means am I suggesting this is something we shouldn't care about at all. After all, there are people in this country who are in trouble and we should care about that. They're our friends and neighbors and our countrymen and countrywomen. But the data show us a couple things. As we've talked about before, the vast majority of people with homes currently in forbearance are current on their mortgage. Either they've always been good to make the mortgage payments, they just took the forbearance out just in case, or they took the forbearance out and then got their job back, got their income back up, or found a way to make it work. That is to say, it's a small number of people, around 15%, who are in forbearance and who have not yet figured out a solution. Okay? Now, that 15% is a reasonable figure, and it's important. Those are real people in real homes. But as a percentage of the country, it is still relatively small in terms of how that impacts our entire market. But today I want to specifically note something else that's cause for optimism. As we can take a look here, as we can see here in the graph, most people do not owe enough on their house to be in trouble if they have to sell it. Now, the bars in this graph represent the amount of debt homeowners have currently against the value. So to make this a little easier to understand, let's assume every homeowner in this country has a $100,000 house. I know, it's been a while since that's been the case, but let's just say for the sake of easy math, everyone has a $100,000 house. What the blue and green bars show us is that 90% of the people owe no more than $89,000 on that $100,000 house. Meaning, if they had to sell it tomorrow, they have plenty of equity to play with if they had to sell it at fire sale prices. Now, the good news is, in today's market, if you priced it for a fire sale, the market would probably correct you and get you out of the fire. But that's beside the point. If we look at the bars in red, those are the ones where we do need to have some concern. Because this shows that 1 out of 10 people with active forbearance, this isn't 1 out of 10 people in the country, 1 out of 10 homeowners with an active forbearance have 11% equity or less. Meaning it's possible that if they had to sell during their forbearance or right after their forbearance was up, if something came up, major repairs, major issues, low appraisals, it's possible that they would not have enough equity to pay off what they owe on the house at the time of the sale, which would put them in that short sale scenario, or not get it sold because they had to price it so high and they lead to foreclosure. That's only 1 out of 10 people in forbearance close enough. And let's remember again, that doesn't necessarily mean that would happen. If you have less than 11% equity, that still gives you plenty of room to make a sale where you can pay off your debts and get out, at least financially unscathed, if not otherwise. So again, by no means am I suggesting that there's no cause for concern with people in forbearance or their equity or their position to get out. Of course there is. And if you're in that position, please reach out to your mortgage company or your bank and ask what sort of arrangement you can make, and maybe open up a forbearance for yourself. Come up with some sort of arrangement so you can try and stay in the home until you get back on your feet and can get back caught up again. But on the grand scale, most people who are in forbearance are current on their mortgage, and most people, the vast majority of them, have enough equity that if something came up where they absolutely had to sell, they would not have to do it at low prices. They're not going to hurt home values in their neighborhood. Again, it's something to be aware of. We're going to keep an eye on it, but understand it's not a big threat as of right now. If you have any questions about the forbearance numbers, reach out and let me know. And if you're curious how much equity you have in your home, reach out. We can also get you an update on that as well. In the meantime, I hope you're thawing out. I hope your electricity is back on. We'll talk to you soon.